As you're aware, the investor brief is an important calendar item in Stima Sacco. It's when we can be able to come together, speak to our shareholders, our stakeholders, and of course the larger community at large, just to tell them a bit about what we did in the previous year.
Investment income, you can see how it has grown, below a billion in 2022, crossing the 1 billion line in 2023, and almost touching the 2 billion line in 2024. This was greatly propelled by the high interest rates. We took advantage of the high interest rates in the market. We invested in some of those high earning bonds. I think we got one at 18% and above, and that really is propelling that line of growth, and it's a line that we intend to grow going forward. So anytime we have any surplus funds, we're investing them for the benefit of the members to earn interest.
The strong financial performance underscores our commitment to sound management, prudent risk practices, and delivering value to our members. We remain dedicated to providing financial solutions for home ownership, education, and business growth, reinforcing our mission of financial empowerment.
Let's talk about our unmatched liquidity. We surged from 90.08% to 94.95%, ensuring financial security for our members. So that I can re-emphasize on that point, the liquidity ratio that is required from a regulator is 15%. Stima Sacco is at 94.95%.
The financial sector is evolving rapidly due to technological advancement, changing consumer expectations, and global economic shifts. To remain competitive, Stima Sacco must not only adopt but lead in innovation and service excellence. As we expand, we remain committed to maintaining a high standard of governance, compliance, and ethical leadership. Strengthening risk management framework will ensure long-term stability and protect our members' investments. Our members remain at the heart of Stima Sacco, and to better serve them, we will expand financial literacy programs to empower informed decision-making.
The quantum that is going to the members, first is the dividend, 16%. 38% went to interest on rebates. Retained earnings took 15%. So if you just add up what is going to the member, who is the most important in this case, is 60%. So we can say 60% of the revenue we earn goes back to the pocket of the member, and which is to us very significant, and it's a number we'd want even to grow so that the member can get more and more.
biggest challenge for any financial institution, and for us in Stima Sacco, is to continue being relevant in the eyes of our members, because our members have options. They are not members of Stima Sacco because they love our brand or love the design of our logo. They are there simply because we are able to give them competitive products equal or better to the other products available in the market. So that for us is always the biggest challenge, is are we still relevant to our membership? And for that, we go on overdrive. We are here to please and appease our membership. We only survive for our membership. Anything that can be able to make them better, we are going to do. So all our strategies are member-centric and member-driven. The core capital of Stima Sacco is 13.4 billion Kenya shillings. I would love to repeat that. It's 13.4 B. The banking sector has given guidelines that banks need to have reached a threshold of 10B. We passed that more than 2 years ago. So 13.4 billion shillings, it tells you that this dream of Stima Sacco, this desire that we do have, this shared vision, is not just within us as management of the board, but is within those 220,000 people. We are built from them, we come from them, and everything is by them. And we do think that moving forward, even as we increase the membership, our dream and desire is that just like we had 10 members in 1974, and the kind of personalized service that they were getting, the kind of attachment they had with Stima Sacco, I'd wish when we have 385,000 members, each and every one of them says, I am attached to that institution. It is my institution. I am an owner there. And I think because of that, I need to put more money in and I can be able to get a better return from it. We have been doing our demography to just try and understand how our demography looks like. We do realize and we do appreciate that those who are 60 years and above, up to 80, 90 years of age are with us. And for them, majority of them are what we call net savers. Yeah, they're not borrowing money, but they're looking for a place whereby they can be able to park their money and utilize Stima Sacco almost like a pension, whereby every month they're able to get some money in, some cash flow in. So a lot of them are what therefore I consider to be net savers and very important to us. Similarly, when you come to this range of 50 to 60 years, you start seeing them transcending from being net borrowers again to net savers. Our younger generation, majority of them, I have members as young as, if you look at the demography of 18 to 25, are net borrowers. Majority of them, and it's understandable. You're looking for your first car, for your first house, you're still trying to educate yourself, so you're most likely to borrow than to invest. But you're also seeing some of them investing. Last year, as a key example, amongst our top investors was a 28-year-old gentleman who had put more than 5 million shillings into the Sacco itself. So when we look at that, we think it's a classic example that this thing called Sacco movement is not necessarily of what we've always been taught. It's for our fathers and mothers and old people with white hair and things like that. No, it is for all of us. And the best way is to demonstrate to the younger generation that Stima Sacco has come of age. We have embraced digitization. That's very key for us. If you're to look at what we're doing this year, two main key things. Number one, bringing a digital credit scoring system that will enable us to move away from this pure guarantorship model. I know we lend in terms of collateral, we lend in terms of vehicle. If you want a house, a plot, we can use as a security. However, I'm talking about this element of looking at you, at your social contracts as an individual and being able to lend to you and being able to say, no, looking at other behavioral trends, then perhaps you can be able to lend to you. So we're looking at a credit scoring system that for us will revolutionize the way that we are doing our lending to our members so that we move away from physical appraisal literally to a digital appraisal. I know we do that in a small way, but that's only for our digital loans up to 120K, but I'd love this to be for all our loans. Say your mortgage, you want a car loan, you want an investment loan, we should be able to actually do that. The second thing that we're looking at doing for this year is to bring in a member onboarding system that is purely end-to-end digitized. No human intervention, no coming to the branch, no need for you to confirm anything. From end to end, to be able to onboard somebody who is in the farthest corner of this country. I'm trying to think which is the farthest corner of the country, but the farthest that you can think of, mtu ako Turkana kule juu, somebody in the corner there in Wajir, somebody past Lamu, somebody in Peketoni, somewhere there in the island, in the middle of the islands, who has no access to a physical location or a branch. That is to tell that person, you just go to the mobile phone and you'll be able to join Stima Sacco. That is our desire and our future, and a big investment is going around that. My last point is very simple. The future is for the youth. So if you're a business and you're not youth-oriented, I'm sorry, 50 years from now, you're not going to be there. And Stima Sacco has every desire to be here for the next 50 years. But who are the guys going to be there 50 years? Me? I won't be there. But they'll be the younger generation. And we do hope that we can take them through this journey of financial inclusivity, the beautiful bit of the cooperative movement, and again, give them the baton so that they can take us to our 50-year journey and our 50-year destination.